Hello and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is October 23rd, 2025. I'm here with you to analyze Bitcoin using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, any profit or loss is your own responsibility. Now, the upward move we were expecting happened after a slight dip. You see, we were roughly at this red candle when we talked yesterday, and the price moved toward the upper zone and almost touched it. The upper zone was around 110,350, and up to now, we can bring this a bit lower, and it started moving downward. It almost touched the blue zone, which is the maximum loss zone on the downside, and now we're waiting to see if this downward move will likely continue. Let's go to the market screener and see what we have from reviewing trades from the start of today until now for tomorrow's expiry, October 24th, which is Friday, the last and important expiry of the week. 5,225 bitcoins have been traded in the form of 1,955 option contracts in the raw database, and the result is this kind of curve. Let's turn on the delta as well. In terms of delta, we've almost reached the end of the line. If we consider this level up to 110,400, I think we said, we've moved almost up to here. That means we've gotten close to the profit peak at this red point. This profit peak at 112,000 can still be our target, but considering the candlestick patterns we see here, after that shadow where we went up to about 110,400 and then pulled back, and if you look at the previous candles, this one turned into something like a pin bar, and the current candle has so far formed a hanging man. It seems the bullish momentum has decreased, and our short-term upward trend is starting to turn downward. In other words, we've probably already seen the upward move, and from this point on, you can see we're facing call selling, and as a result, the delta has decreased while the price is holding. So, we can probably expect a move
downward. Similarly, on the downside, as the price drops, delta also decreases. You can see delta decreasing down to about 106,000 and even lower, to 105,000. When we reach 105,000, delta starts to increase as the price drops,
and we encounter put selling, which signals a market bottom. So, from 105,000, the market bottom starts again. And if we go to the middle of the delta, around 103,000, you can also find the bottom there.
So, it's likely that our move downward will continue. If we move the slider forward in time and look at the latest trades, it becomes clear that we've already seen the top. You can see here that the red curve has gone into loss from 110,000, while we went up to about 110,400. So, we've moved up to here and hit the top, and now we're heading down toward this profit peak on the red curve at 106,000. So, it seems that a downward move is the logical one and will continue. If we process the database and remove the negative open interests, again, if we look at the last hours, maybe the curve shape, yes, you see, the trades in the last hours almost match the initial database shape. That means we've seen the top here and are heading toward the bottom, where again you see the profit peak at 105,200. That's one conclusion we can draw. Now, let's go to drawing the indicator and zones and continue. You can see the intersection of the buyer-seller curve. The upper agreement is around 112,800, and the lower
agreement in profit is around 106,800, and in loss. The upper zone is an agreement zone, but the lower zone is not like that. In the upper zone, Sellers don't want above 112,900, but buyers want above 112,500. So,
in this zone, buyers and sellers agree, which shows an upward tendency, but it seems that upward tendency has been used up. Because if we look at the current time and go back to the start of trades at 0 hour on October 23rd, which is about 17 hours ago, we almost reached this red candle.
So, trade started around this red candle, and we can say this bullish move has been used up.
Here, we got close to 112,000. Of course, the agreement is at 112,800, so there's still room to reach it, but given the current situation, it seems the move will reverse downward. At least part of the bullish move has been used up, we can say. Let's see what the rest of the data says. Let's put these into the indicator and continue. As you can see, both indicator bands have moved upward. This is important and interesting. Both indicator bands are moving up, with higher lows and especially higher lows, and the high has also gone up compared to the previous day. The bullish expectation is happening. But the question is, will it stop here, at the line we drew yesterday, or will it break through and go for 112,000? That's what we need to see if we can figure out in the rest of the analysis. Let's go update the zones. As you can see, our zones have also moved upward, following the two bands. The upper zone is wider, the agreement area is in profit, and the lower zone is not like that. The upper zone is about 112,450 to 112,950, and the middle zone, where we are now, is 109,500 to 110,000. The lower zone is about 106,600 to 106,800. Here again, you see the upward tendency. This bullish move also caused the RSI to hit the moving average and reach 150%. That's another positive signal. Let's look at delta and gamma as well. Gamma isn't available, so let's skip that. As we said, on the upside, you see the delta intersection with the red curve at 110,000. This point is very important. We have the profit peak of the red curve at 111,900. A bit further, in the middle of the delta, is almost the gamma peak, which is 112,500. That's our gamma peak, and it's a conditional gamma, because with price increases, delta decreases and negative gamma forms here. Around 112,500, we can say that's the long gamma, and in this upper zone, it creates a resistance area. The point where the red curve goes into loss is about 113,600, which is important, and then the intersection at 116,500 is also significant. On the downside, where we are now, 109,500 is where the red curve goes into loss, and the loss peak is at 107,000. Then the red curve breaks the level and goes into profit at about 106,200, and the profit peak on the downside is around 105,000. The gamma on the downside, which comes from put selling, is around the middle of the delta, about 101,200, which is here. Here, where it has gone very low, that's also a point. The fact that the bottom has been seen at such low levels is important. If you look at delta, compare the depth of delta's penetration on the upside with the depth on the downside. You'll see that this deep penetration on the downside indicates a large volume of put selling, or that more puts have been sold, apparently. So that's delta, and let's take a look at the Saturday expiry. If we add Saturday, the curve shape doesn't change much. The same things we've discussed still apply. If we remove tomorrow, you'll see that Saturday alone has a bearish profile. That's another reason. See, the overall curve is bearish. We're currently moving downward, and delta is increasing up to 105. That means from here to 105, which is the delta peak, as the price drops, delta increases. In other words, the bottom is seen at 105. If 105 can't hold, then a large volume of puts has been bought here, and as you can see, with the price dropping, delta decreases, which is accompanied by put buying. The peak of this is at 98,000, so 98,000 becomes the target. That's why holding the 105 support is important. Let's see if it can hold or not. So, for Saturday, as we move forward, the Saturday outlook becomes even more bearish. For example, from October 23rd at 6 o'clock, if you look at trades from then, it's become sharply bearish, a complete put buy, just at the start of the downward move. The midpoint is also 100,000, so its long gamma is kind of at 100,000. You see, for Saturday, the outlook is strongly downward. All of this supports the idea that we're probably at the end of the line here and might not move toward 112 anymore. That's the Saturday expiry. Now, let's take a look at the trade details. For tomorrow, there are 777 Bitcoin, of which 2,369 are call buys, 1,107 are call buys, and 1,261 are put buys. They're close, but put buys are slightly higher. Put buyers see profit below 178,000. Below this area, below this zone, they see profit. If we review the entry of these trades and go back to the beginning, as we said, we reach this candle. So, these haven't been realized yet. It's the call buys that have been realized. Where did our call buyers want to reach? Above 110 and 200, which was achieved. We reached up to 110 and... Yeah, so we went up to about 110 and 300. Let's say 300, 400 if we counted. So our calls were executed, and what's left are the puts. So here, it's a downward trend. The move to the downside is confirmed. The sellers are 4,700 Bitcoin, out of which 1,742 Bitcoin are call sales and 2,965 Bitcoin are put sales. Just like I mentioned before, look at how intense the put selling is. So many puts have been sold. The floor is at 17,600, 106 to 107 and 600 is the floor, and that's really important. If you consider the gamma long and the gamma condition, if you take the average, it even reaches 103. So, many traders have sold puts
at this lower level and expect the price to come down to this area, and that's when they'll enter the market. Now, where do the call sellers see the ceiling?
The call sellers see the ceiling at 100 and... Look, the call sellers, let me explain, see the ceiling at 111,300. 111,300 is the level we move toward, and it seems like it's been reached. Maybe we'll make one more move upward and reach 111,200. This is exactly what I
Told you yesterday. We might come up to this point, and a head and shoulders pattern could form here.
So, there's a chance we'll go a bit higher based on the call sellers' targets and then turn back down. But it seems that on the downside, the call sellers have seen a bottom that hasn't been reached yet, and they're waiting for it to happen. So, the downside still has more weight. Alright, that's the detailed trades. Let's check the process database. I'll set open interest to 1 so that only closed trades are shown. Let's take a look at the 1,527 Bitcoin trades. 10 Bitcoin, 15 Bitcoin, 20 Bitcoin, 20 Bitcoin, not bad. We have 2 trades at 26, both above 20 Bitcoin. The overall shape and curve are pretty much the same as before, not much difference. But let's see, here we have 2 block trades with the same number. Yes, let's see, a short strangle from 106 to 114. So, for tomorrow, they're expecting volatility between 106 and 114. In the last hour, we were moving toward 114, but so far we've only reached 110,300. Let's clear this. These 2 trades are similar, 2 blocks with the same structure, again, a short strangle from 106 to 114. This one is the same, another short strangle. So, let's add these up. So far, 150 Bitcoin in short strangles targeting 106 to 114 for tomorrow, aiming to collect premium from volatility in this range. This one is pretty much the same. Here are 2 more with the same numbers, same structure. So, that's 300 Bitcoin. Almost all the strategies for tomorrow are volatility plays between 106 and 113, up to the upper zone. Alright, let's take a look at the 24-hour liquidity. In the past 24 hours, you can see there's a lot of liquidity on the downside, especially from 108,300 to 108,700. Which is very close to the price, so that's a target for the price. On the upside, from 110,400 to 111,200, there's a liquidity cluster. So, again, this shows the price is more likely to move downward. In the 48-hour view, you can see a strong liquidity cluster at 114, and also at 112. If we look at the 3-day view, there's a bit more dominance on the upside in terms of liquidity compared to the downside. Let's go back to the market screener and look at today's trades for next week's expiry, October 31st. For October 31st, today's trades only show potential movement in both directions, but right now we're leaning toward the downside. If we look from last Friday until now for the October 31st expiry, we see the same situation. Potential for movement in both directions, real uncertainty and confusion. In my opinion, this kind of uncertainty and confusion is always a sign of a pivot point. When the market is at a spot where the price wants to pivot or make a swing, or the trend wants to change, this always happens. It's hard for traders to pinpoint the exact bottom, as they say, and it's really tough. Based on our analysis, it seems that with Saturday's expiry, which is bearish on its own, today's trades for Saturday are showing a strong bearish bias. We might be able to reach 111,200, which is where our previous curve was, and then drop back down toward 106, around here. Alternatively, the move upward could continue and attack the upper zone at 112 or 113. But as you saw,
The reason I mark this is because the call sellers' targets haven't been fully reached yet. If you remember,
Our call buyers wanted above 110, and our call sellers want this area as the ceiling. The price could come up to here if we consider this the call sellers' ceiling. But there are a lot of put sellers, and they're eyeing the downside. Saturday's sentiment is also bearish, although our indicator bands are both pointing upward, which suggests a bullish outlook, maybe for the longer term. So, this drop could end at 105, 106, or 107, and the price might hold around 106,700 and then move back up. But in the coming hours, I think we might gather liquidity up to 111,230 and then head back down toward 106. This 105 to 106 bottom is getting a lot of attention and could be reached. Naturally, the second scenario, which would break the first, is a strong move upward, reclaiming this ceiling and heading toward the 116 ceiling. Thanks for your attention. I hope this was helpful.